Mod Pizza is part of a growing trend of do-it-yourself restaurants where customers prepare their own pizza by specifying specific ingredients they want on them. Mod was started 7 years ago and now has more than 70 company-owned locations around the country. Scott Svenson is the company's CEO and he joins us here in the studio. Scott, thanks for stopping by.
Thank you for having me.
Now, you started London-based Seattle Coffee in 1998, then you sold that to Starbucks, and now this is your new venture. How is this different than other do-it-yourself pizza chains that are out there?
That's a great question. So we started Mod Pizza at a time when nobody had done what we call fast pizza, bringing the fast casual lifestyle to pizza. And so one, we were the first to try it, and secondly, we've built a business that has a fantastic group of people around it, people who've been involved with building brands such as Starbucks and Panera Bread and Dunkin' Donuts. We've pursued a primarily company-owned growth strategy. So of our just under 70 stores trading today, most of those are company-owned. And to support that growth, we've raised a substantial amount of capital. We've raised $75 million of capital to date. But most importantly, I think if you spend time at Mod and you come and visit as a customer, the thing that differentiates us from our peer group is the experience you get. And the experience you get is inspired by our culture. And our culture is all about our people and trying to make a difference in their lives. And I think that's really where the story of Mod is interesting, is building a business that is unapologetically for profit and one that is all about building a fantastic food experience, but where the real motivation and inspiration lies in using that as a platform to make a social impact. And our focus is on making an impact in the lives of the people who work for us.
The minimum wage debate is something that a lot of people are talking about, taking that up to $15 over the next couple of years. What sort of impact do you see that having on the company-owned stores? And you're also trying to build more franchisees. Yeah. So has there been any pushback in terms of who wants to be a franchisee if they know that the minimum wage is going to go up in the next couple of years?
Well, it's a great question. Interestingly enough, we have 1,700 employees and we'll have over 2,500 just by year end. So we're growing very rapidly and we'll more than double that again next year. And so wages and compensation are a very important topic for us. Fortunately, given the fact that we're a company that really focuses on our team as a primary motivation, we pay very well. And so it's a double-edged sword. Costs on the labor side will go up for us. But we already pay very, very well. We pay well above the minimum wage across the country. That being said, it will continue to be a challenge. In Seattle, where we currently pay $11 as a minimum, it'll be $15 within 2.5 years. So yes, it will squeeze us. We're up for the challenge. We think that's a very good challenge to take on. I think the other side of the coin is that I think there are many other concepts and brands and operators out there who are not as well positioned to take on that challenge. And so while companies like ours will end up having a larger percentage of their sales going to labor, there probably will be fewer competitors long term because there'll be a natural winnowing out of people or operators who are not as well set up to take this on. So we think it's something we have to be very diligent about and very thoughtful about. There are going to be some unintended consequences. It's interesting, if you go and interview our teams, and we talk to them all the time about what they're looking for. Most of our squad members, as we call them, are starting at $10 or $11 an hour, and in some cases higher. And we ask them about the various value they get from Mod, whether or not it's their base wage or incentives or benefits or development opportunities. And they all, given the wage that we already pay, they don't believe that we should be increasing our base wage. They want us to be putting more money into development and growth, which is why they've come to Mod. Is they want to come to a company where they enjoy working, where they really align with the values, where they will be taken care of in terms of that base wage and benefits. But then they want a company that has their back and is going to develop them, which is an area where we spend a lot of time. A lot of local jurisdictions are rebalancing the scales for us a little bit and putting more into the wage, which is fine. But it will mean that over time there is a balancing because you can't, it is a little bit of a zero-sum game. You've got to make sure that if you're investing more in your wage, you might have to tighten up in other areas.
So doubling the amount of employees over the next 12 months, you're in 8 markets right now. Where do you see expansion over the next year? Is that expansion going to come from filling in some of those markets you're already in, or is it going to be expanding into new markets?
Well, as a matter of fact, just over the last month or two, we've expanded that to 12 states. We're in 12 states, and we've intentionally expanded into a number of key markets very quickly. And what we plan on doing now is spending a lot of time and effort building those markets out, and supplementing those by adding in contiguous markets. And we'll do that both with company stores as well as with partners. Right now, 95% of our stores are company-owned, and over time, our company-owned ratio will remain well above 50%, but it will decline gradually from the 95% that it is today. And we will take on new markets. So today, we just recently opened in North Carolina. In a couple of weeks, we open in South Carolina. We recently took on some real estate in St. Louis. There are a number of markets that we'll be opening in. But we've been very aggressive about getting into those markets that we're keen on building a strong brand in. And so we extended ourselves rapidly, and now we're going to be doing a lot of infill development to build our brand in those markets.
Scott Svenson, CEO of Mod Pizza, thank you so much for joining us.
Thanks for having me.